Hello traders, my name's Igor Borisenko and this is WaveTrading Live, so please write in the question box, can you hear me or not, and if everything is fine, we can start right now with dollar index. We've got this interesting moment. It seems like we are going to have just another pullback from this moving average line. This one 250. Also, we've got here this upward channel which draw from these highs and this low. So we're likely going to have just another pullback from this lower side of this channel, which means this upward price movement is likely going to be continued. So we could have, for example, an ending diagonal pattern in this wave 5, which means bulls are likely going to deliver just another zigzag in this smaller wave 3. Why a zigzag, not an impulse? Because as you probably know, we've got zigzags in diagonal triangles in waves 1, 3 and 5. Sometimes, for example, like it could be on Canadian dollar, sometimes it could be impulses as well, but in the most cases, in the majority of cases, we usually have zigzags in wave 1, 3 and 5 in ending diagonal and leading diagonals as well. So if, for example, we see something like that, an upward impulse and a following correction, and a good example of this story is here, like possible wave 1 and wave 2. If we see this price movement somewhere in here, it could be a good confirmation that this bullish trend is likely going to be continued. I hope you can hear me, because it was something strange here, but now it seems like everything is fine. So I hope so. Yeah, it seems like everything is okay. So as we can see here on the dollar index daily chart, this bullish trend has an opportunity to be continued. So let's move on to another market, which is euro dollar, and here we can have also diagonal triangle in this wave C. The main story here is a downward double zigzag like WXY, and this wave I in this case is a zigzag with an impulse in this wave A, a small correction in wave B, and an ending diagonal pattern in wave C. Also, it could be like a scabbard triangle in wave B. So in this case, the pair could go a little bit higher than under this wave count, but both wave counts have the same critical level, which is, I can show you this high, the high of this wave 2 on this wave count, and here this critical level is the high of this wave C, this one. So if this level is broken, then we're going to have another wave count. And as you can see on 3 hours and 15 minutes charts, it's very likely that this correction has been formed like a double zigzag. WX like a triangle and another zigzag in wave Y, so we've got an opportunity to have a bearish impulse in wave A. Why wave A? Why not wave 1? Because we've got here a possible diagonal triangle within zigzags in wave 1 and wave 3, which means we are likely going to have just another zigzag in wave 5 here. So if we look at 15 minutes chart, we could have here this bearish impulse in wave 1. Also there's a flat pattern in wave 2. I hope you remember that flat patterns have a structure 3-3-5, which means wave A is a zigzag, wave B is a zigzag as well, and we have got in these patterns wave C like an impulse or sometimes an engine diagonal. Also, it's crucial for flat patterns to have quite a big wave B, not less than 85-90% from wave 1. So sometimes wave B could be even bigger than wave A. I mean, in some cases, wave B in flat patterns could even broke the beginning point of wave A. So for now it seems like we are going to have an extension in this wave 3, and let's try to look at these smaller waves. It could be like this. So it seems like we've got here this triangle in wave 4. You can see the upper side of this possible pattern and the lower side. So we are likely going to have this wave 5 in the coming hours, and what we have next will be, the most important story, because as you know from my last webinars, if you have two impulses, and let's imagine we've got this wave 1 and this wave 3, until we've got an appropriate correction for this impulse, I mean this wave 4, there's also another wave count, which means this price movement could be also a zigzag like A, B and C. So when this wave 5 of 3 ends, we should be very careful with this pair. I mean, if we've got something like this after wave 5, it could be, a signal that we should forget maybe for sales here for a couple of weeks, because if we've got here a zigzag like A, B, C, then there'll be an open door for this wave E to be continued towards the upper side of this possible triangle, which is for now an alternative wave count. So if we've got here something, some local consolidation, it could be a good confirmation that, okay, we could have also this wave 5, and if this bigger impulse forms, it could be a good beginning for this wave 5 of this wave C. Also, there's a third wave count, which means we could have an extension in this wave 3, which means this wave 1 could move here. So, and this wave count require a smaller correction than this one. So if we've got, for example, something like this, I mean a small zigzag and a downward impulse, this story will be a confirmation that we're going to have a much bigger wave 3 than we think we could have now. I'm going to check my question box. Okay. If you have some questions, just ask me and we'll discuss. Another interesting market, and you know, the most important point of it, because this webinar is called WaveTrading, so I'm not, talking about waves like form of art. I'm talking about it like a tool to make trades, to open trades actually. So for now I'm out here because I've got another trades and I don't want to have a huge risk here. So it seems like I'm going to trade only after this correction. If it could be the third scenario with a small correction and a possible extension in this wave 3, I mean this one, then I'm going to sell. Also, if we've got this kind of flat correction and if this critical level, I mean the low of this wave 1, if this level remains unbroken, then I'm going to sell to trade this possible wave 5, but for now I'm out here. So let's move on to another interesting market, is British pound, which has this correction which could be wave 4 inside this quite big impulse in wave C. I mean like 1, 2, 3, 4 and 5. We've got here a target which is 200 moving average line, I mean this one. So let's go to our intraday charts, and firstly let's have a look at the 3 hours chart where we've got this bullish impulse, I mean this wave A, which has a pretty clear wave structure like 1, 2, 3, 4 and 5. As you can see here, wave 3 has an extension, so we can see its inner structure, more detailed than we can see structure of this wave 1, and at the same time we've got an ending diagonal pattern in wave 5. So now it seems like we're going to have this bearish impulse in wave A inside this possible wave B. For now, we can't be 100% sure which pattern wave B could be. Sometimes we can make some, projections only when a half of this possible wave forms. I mean, if we've got here an impulse wave, if it finally arrives, then we can think, okay, it could be a zigzag, so we can have wave B and wave C. However, if we can have here just a zigzag pattern, I mean like ABC, and if we won't see here this wave 4 and this wave 5, I mean if only these two waves, wave 1 and wave 2 and wave 3, if only these three waves remain on the table, then we could have another scenarios with a possible triangle, for example, or even double zigzag in wave B. So the first wave in the correction, I mean not wave 1 but the first one, this wave A for example, could be a sign which form this correction could take until this wave is on the way, we should be very careful, and that's why I'm trading here only the current impulse. I mean, this possible wave. Also, I understand that, as I mentioned just a few minutes ago, we could have here even a zigzag like this. If so, I'm going to have this profitable stop and be out until we've got something, more tradable than now. So, for now, I've got here one short trade from the last week, and I'm going to sell more only if we've got this possible wave 4 in a shape maybe in a shape this similar with this wave 2. So we even can draw here a channel like this. So if this correction ends somewhere in here in the coming hours, and now we've got this, so it could be until even tomorrow, so we can see what will happen here on our next meeting on Wednesday. So if we've got a pullback from the upper side of this channel, and if, which is more important, the inner structure of this correction will be, a clear, if we've got here a kind of complete wave pattern, triangle, zigzag, double zigzag, whatever, if we see, okay, this correction may be ended here in this form, and if we also have a pullback from the upper side of this local channel, only then I'm going to sell more just to trade this possible wave A. I should have here exactly wave A, not wave 1. Sorry about that, but the meaning is the same here. So that's my trading plan for pound for the coming days. And also, let's go back on the chart. Also, if we've got here, here, for example, our wave B, it could be like this, it could be even lower, we just don't know at this time. But if this correction arrives, maybe in a couple of weeks, if we've got something like that, but a little bit bigger, a zigzag and wave 1 and wave 2, then it'll be a quite good chance to have long trades here in wave C, because if you've got here a zigzag, and let's imagine the first one in the direction of this wave C, I need to change my degree here, I think to this one, which is fine. It'll be, a good chance to trade wave C. Also, we don't know proportions of this possible wave. So, for example, it's a usual story actually. Wave 1 in this case must be an impulse or a leading diagonal pattern. So just a second. Yeah. If you have here this possible zigzag, okay, let's imagine. And then if you have here this, bullish impulse, which you think may be wave 1 in the direction of wave C, but you can't be 100% sure which degree this wave is. It could be wave 1 of wave 1 like this, or it also could be this wave 1, and in this case you can have a much bigger extension in the third wave like this. So usually I'm not showing all these wave counts, but if you've got a correction and a bullish wave in the direction of your wave C, it could be a sign that you could have something following, I mean wave C at least, because it also could be like this, like ABC, and then wave B could be a double zigzag. So this story with a zigzag and an impulse wave and correction, it's the most safest which called, I don't know, trading setup, because after this impulse and this correction you can have at least wave C, which allows you to move your stop loss at the break-even level. I mean, if this correction is going to be continued, you in this case don't lose anything. So for now I'm trading here this bearish wave A, which could be an impulse wave, but I also remember about the bigger picture, which means we could have here another impulse in this wave C in direction of our target, which is 200 moving average line. I'm going to check questions. Okay, and let's go to another market, which is Japanese yen, which is quite bullish, isn't it? And we've got here a possible zigzag, as you probably remember from our last meeting, which could be wave 2 or B. Also, there's a very strong impulse in wave 1 and a double zigzag in wave 2 here. And as you can see, we've got a smaller wave 1 here. So we could have just another impulse. It could be wave 3 or wave C under an alternative wave count. So this story is pretty clear, but here on a 3 hours chart, it seems like we've got just a zigzag here, which means it's likely to have this wave 2, I mean this one, it's likely to have this wave a little bit bigger, for example in a form of a double zigzag like WXY. Also, as you can see on the 15 minutes chart, it seems like we've got this bearish impulse, which could be wave A inside this wave Y, because as you know, this marks like WXY means we've got this, in this case, downward waves like threes, like zigzags, or even sometimes double zigzags, but not impulses. So I'm expecting here for this bearish impulse in this wave A on a 15 minutes chart. And I've just actually solved this pair, and I'm going to show you my trade, because it seems like this critical level, I mean the low of this wave 1, hasn't been broken. Also, these two corrections seems, quite same. And in this case we can also draw a channel like this. So also we've got a pullback from the upper side of this downward channel. So in this story we have 3 reasons I've sold just 45 minutes ago. We've got a possible impulse in wave A and wave structure of this wave 4. So this one seems to be ended, the first reason. The second reason, this correction was, quite active, but our critical level, the low of this wave 1, this low again hasn't been broken. And also we've got a pullback from the upper side of this local channel. So 3 reasons I've sold here, and I'm going to trade only this wave. I think it's trade only for Monday or maybe for tomorrow, but it's actually overall a very short-term trade. So, yeah. And then the most interesting part actually, it's not this local trade, because it's just maybe 50 points here, which I could take in this wave 5. But the most interesting one here is this possible wave 3 and this smaller wave 3. I mean wave 3 inside wave 3. So the main goal for this pair is just waiting when this correction ends, maybe in a form of a double zigzag. And when we've got something like this, I mean bullish impulse and a local correction, actually like it was here, but this price movement turned out to be a zigzag overall, like ABC, not an impulse, but it's just a good example which I'm speaking a few minutes ago. I mean, if you have a correction which you think could be ended in some form, and if you have an impulse wave in the direction of the main trend, it's a very good moment, because you can have wave 3 or small wave C at least, which allows you to move your stop loss to the break-even level, and nothing wrong happens with you if this correction is going to be continued. But again, as you know from our last meetings, you should be very careful in a moment when wave structure like this could be a zigzag. So you must see these moments and be careful when they are on the table. So I think that's all for Japanese yen. And let's move on to another market which is, quite interesting. It's Swiss franc, and we're likely going to have the third pullback in a row from this lower side of the upward diagonal triangle in wave C, which means we could have here another bullish impulse. I mean this wave C in direction of the upper side of this pattern. So let's go to our 2 hours chart, where we've got, let's count, 1, 2, 3, 4 pullbacks from the 78% retracement level of this wave A, which is quite good. Also, the wave structure of wave B seems to be ended. I mean, we've got a leading diagonal pattern in wave A, we've got a triangle in wave B, and we've got just a usual impulse in this possible wave C. So it means we could have another upward price movement, which could be an impulse wave, which I believe now, and also it could be something like this. I mean, an ending diagonal in some form. So again, there are a few options which are on the table, but for now I've got here a long trade like this one with a stop loss at the nearest critical level possible, which is this low. So if we've got here something like this on a daily chart, it could be a good story to have trades on a 1 hour chart, because we could see wave structure of this price movement here quite well. So if we're going to have here a bullish impulse, I mean this wave 3, and we could also draw here a possible extension of this wave, something like this. Okay, so if we are going to see something like that, then I'm going to buy more and more on each correction until this wave ends. And there's a quite, important moment, because as you know, waves 1, 3 and 5 of diagonal triangles in most cases are zigzags, and that's our case. Sometimes these waves could be double zigzags. So if you are not sure what you have in your wave A, now I've got here this possible leading diagonal like 1, 2, 3, 4, 5, but the shape of this pattern, quite tricky. I mean, it has an expanded way like this, and also wave 5 hasn't broken the high of wave 3. In this case, I'm going to trade here only the common impulse, which could be wave 3 or wave C. And when wave 3 ends, I'll be out of the market until we've got a correction, which could be wave 4. And only after this correction, I'm going to trade this pair again to trade this possible wave 5. But it's too early to call this wave. So now I'm concentrate to trade just the current impulse, which could be this wave 3. So, it's quite a good opportunity here, because we've got this pullback from the lower side of this ending diagonal in wave C. So that's all for franc, and let's move on to Australian dollar. This triangle in wave 4 here is still in the game. I mean, we could have wave 4 and then an impulse in wave 5. But let's have a look at the intraday charts, and you'll see here that this moment isn't easy. I mean, we've got here again this wave 1 in the form of a leading diagonal pattern, And we've got also a possible zigzag here in wave 2. But again, this moment is very critical for wave count, because here we've got something like this. I mean, two impulses, which could be wave 1 and wave 3. And also we've got this small bullish impulse, which could be, for example, wave A of this wave 4. But also in this case, we could have wave 2 bigger in a form of a double zigzag. So this ABC in this case is going to be W, this price movement is going to be ABC, like wave X, and this bullish wave could be just, the first step into wave Y of this wave 2. So this wave structure telling us that we should be here very careful, and that's why I've got here just one short trade. I'm not selling more here, because it could be very risky. But this situation could change in the coming hours. I mean, if we've got finally this wave, let's imagine like ABC, I mean this wave 4, and if we've got like a pullback here, I mean like this, firstly rise, then pullback, then maybe I'm going to sell more, and I think I'm definitely going to sell more if I'll be online when it happens. Why? Because we could have here this leading diagonal in wave 1, but also it could turn out like an extension in this wave 3, so this local impulse could be wave 1 of this wave 3. So if we see a moment like this, I mean wave C and bearish pullback, I'm going to sell to trade this scenario. If we've got afterwards a pullback from the lower side of this possible leading diagonal pattern, then I think I'm going to close my trade, which I even haven't opened yet, and then it'll be time for correction. I mean for wave 2, if we've got here a leading diagonal. But if this line is broken, it'll be a green light to have an extension in a third wave. So Australian dollar seems to be very interesting, but at this moment on Monday's morning in Moscow, it has some potential to be lower, but at this time it's better to stay away. Expect to have some trades you opened last week somewhere in here, like me. Another market is Canadian dollar, and it seems like we've got here this a quite good line, I mean like this, and this wave 4 seems to be ended like a double zigzag. We've got here ABC, small wave X, and another ABC in wave Y of this double zigzag. Also, it seems like we've got a story we had here. I mean, just a few moments. We had here. So a bullish wave and the correction. So it could be just the first step into wave 5. So we could have something maybe like this in the coming hours during this week. So I'm going to buy this pair very soon to trade this wave 3 or maybe wave C. In other words, I'm going to trade the common bullish impulse, which could be wave 3 or wave C. I think the most important one that this structure tell us we could have just another bullish wave. If we've got here, for example, an extension or just a very fast impulse like this, it'll be better to go, for example, to 15 minutes chart to see the structure of this developing wave more detailed than here. For example, we can't see the structure of this wave detailed, so we should go to lower time frame. So that's all for the main pass, and now we are going to have some script here, and now we are going to look at crosses. And the first one is going to be Australian dollar versus Canadian dollar, which still has some bearish potential. So let's have a look to this market. As I told you last week, we've got here a possible little diagonal pattern and a possible double zigzag in wave 2, so it means we're likely going to have one more bearish impulse, which could be wave 3, this one, or it could be just wave C, because if you open the daily chart, you'll see that overall we've got here a huge consolidation. But despite of we've got here wave 3 or wave C, it seems like this price movement could be just another bearish impulse, so that's the reason I've got here one short trade, and I'm going to sell even more this pair in the coming days, but I am just waiting when we've got some correction here, and in this case it seems like we've got this kind of pattern, a leading diagonal, which could be wave 1 inside this wave 3, so I'm waiting for a local wave 2, and if it arrives, I'm going to sell more to trade wave 3 inside this bigger wave 3. And that's all for this cross, and let's go to another market, which is which is euro versus pound. We've got here a possible double 3 pattern in wave 4, like WXY with a triangle in wave X. Also, it seems like we've got this development impulse, which could be wave 1 inside this wave 5. However, it also could be wave 5 itself. We could move this wave here, this one we could have here, wave 3 could be here, and then wave 4 and wave 5. So that's the reason I'm going to trade only the current bullish impulse, and when it ends, I'm going to close all my trades and I'll be out of this market until we've got something like this. Like this, but a little bit smaller in this case. So a zigzag bullish impulse correction, if this structure arrives, it could be a signal that okay, we could have this pair even higher. And let's move on to 1 hour chart. As you can see, I've got 3 long trades here with a stop loss at the nearest critical level, which is the high of this small wave 1. So I am waiting here for an ending of this correction, and when this wave 4 finishes, I'm going to buy to trade this possible local wave 5 inside this wave 3. I mean, this wave 3 could be like 1, 2, 3, 4, and 5. So I'm going to buy here when this correction ends, and also I'm going to buy here just to trade this wave 3. And I've got a question here: what type of correction in wave 2 in out USD? As I can see it as impulse wave of 5 waves. I think I need to go back to Australian dollar to answer your question. So I think because you have not same degree as I have here. Do you mean this wave 2? I mean wave 2 on the 3 hours chart. Is it a wave you're asking? I mean, is your question about this wave or something else? Okay, I am just waiting to your response. For now, it seems like we've got here a zigzag, because we've got this kind of diagonal in wave A, we've got wave B, and another impulse here in this wave C. So I've got here this wave count with an option to have this wave a little bit bigger. If you asked about this wave 2 on a daily chart, this wave is double zigzag because it's obvious we've got 2 zigzags here. Wave W, like A, B, C, you can't have impulse wave here. And then we've got correction and just another A, B, and C. So overall, we've got here double zigzag, and it's important we can't have impulse wave in wave 2 and wave 4. This wave in 100% cases, are correction patterns of some kind. So in this case, this wave 2 is likely formed like a double zigzag. And let's go back to euro versus pound. So I was telling you that I'm going to buy this pair even more in those days, so you're probably going to see the results on Wednesday on our next meeting. And we've got some another cases here as well, and the first one from the rest pairs will be this. Dollar versus crown. This market is very interesting. I mean, it seems like this triangle is over. So we could have wave 5 inside wave 3. You know, I can't buy everything I want here, because if I do so, my risk will be so high, so huge. So I've got, as you can see, trades on Japanese yen, on franc, on Canadian dollar, and overall they give me some risk. So and all these trades actually is going to the same direction, I mean to a stronger dollar. So I'm just waiting here when, for example, franc goes higher, Canadian dollar goes higher, and if so, I'm going to buy this pair as well. But this moment is very, very interesting because we've got here possible bullish impulse like that. So after a correction, which could be wave 2, we are not sure which degree, but it could be a wave 2, then there'll be an opportunity to have something bigger, I mean possible wave 3 of this wave 5. So I'm going to wait and buy this pair, and also I've got trade on Turkish lira, and that's another reason I'm not buying here, because it's not good to have so many trades with minus stop loss. I mean stop loss which could be a real loss. As we can see here, this market remains bullish because we've got this local zigzag in wave 2 and a possible wave 2, so it seems like there's an opportunity to have another bullish impulse, which could be this wave 3. So I've got just one long trade here with a stop loss even a little bit above the critical level, which is the low of wave 2. So if the pair goes higher, I'm going to buy more on the local corrections. If this wave 4 is going to be continued, then I'll be out of this market until we've got a complete structure in wave 4 and another bullish impulse afterwards. And I think we should look at pound versus franc, because it's again a quite interesting market, because we've got this. I mean, the price broke this line and then came back under this line, which means this wave 4 may have been ended here. However, I've got a concern here that this wave 4 is much bigger than this wave 2, so under these circumstances I'll be very careful here, because when you've got this kind of difference between two waves the same degree, you should be careful, because sometimes something could go wrong. So for now it seems like we're going to have another bearish impulse, which could be wave 5, and as you can see, we are likely going to have this bearish impulse, which could be wave 1. So it's like more detailed wave count. It seems like we've got wave 1 here, wave 2 here, and there's an opportunity to have an extension in wave 3, and as you can see, wave 1 here is a leading diagonal pattern like this. So I've got two short trades here. Stop loss isn't break even, so if we've got here this wave 5, I'm going to move my stop loss at the high, I mean at the ending point of this wave 4. So we're likely going to have this pair a little bit lower this week, but let's turn on 30 minutes chart, and you can see here this moving average line, which is 89. So we've got a pullback from this line here, and also we've got pullback from this line there. So we've got a target for our wave 4. I mean, if we've got the third pullback from this line, it'll be a good chance to have, a bullish impulse, which could be this wave 5 inside this extension in the third wave. So that's a reason I've got here my shorts. And finally, let's open gold, where we've got this. As you can see on the daily and weekly chart, it seems like there's an impulse wave, which means after a correction of some kind, we could have another bearish impulse, which could be wave C in this case. However, these last waves, I mean this one, sorry, like this one, is, these waves has a quite difficult wave structure, so that's a reason I'm out here. But there's a story with this bearish impulse, I mean this small one, which could be wave A. Also, we've got here a zigzag like A, B, and C. So it seems like after this wave B, which is likely going to be continued, after this wave, we could have another impulse, at least wave C. Maybe this wave will be even bigger. So I'm out of the market here for now. But if we see here a bearish impulse afterwards, maybe like this, and a small correction, then I'm going to try to sell gold to trade this possible wave C, as you can see on the weekly chart. But it's always, the wrong scenario ever, trying to sell it right away here or there. Now I'm going to sell only when this impulse in wave C finishes, and only when we see some bearish impulse or even diagonal pattern afterwards somewhere in here. Until that, I'll be out of the market and just waiting for a right moment to sell gold. So if you have some final questions, please ask me. If not, we are going to meet on Wednesday at 5 p.m. Moscow time. So guys, see you on Wednesday. Have a good weekend, profitable trades. Take care. Bye bye. See you on Wednesday.